Good morning, everyone. Welcome and thank you for joining our webinar today. And we are starting in another 2 minutes. Yeah, good morning, everyone. This is Jyoti here. And in today's webinar, we have Sudhir Pai with us. And before we start, I would like to take this opportunity to introduce you to My Time Equity and Sudhir Pai. As an actively managed portfolio management and RIA firm, My Time Equity takes pride in being your dedicated partner on this financial adventure. Sudhir Pai is a founding principal and serves as a fiduciary investment advisor representative for the firm. Before I hand over to Sudhir, let me take you through the disclosure slide that our attorneys mandate we show it prior to every webinar. If you have any questions during the presentation, please feel free to type them on the Q&A box and we will have them at the end during the Q&A session. If you need Sudhir's help, please write to wealth@mytimeequity.com or call us at 972-330-2771. Over to you, Sudhir.
Thank you, Jyoti. Can you hear me?
Yes, I can hear you.
Okay, wonderful. Yeah, thank you, Jyoti, and very welcome to all the listeners who have joined this webinar on a Saturday morning. So the market was good, it was green, and we saw both the indexes, Nasdaq as well as S&P 500 do well. Um, Bitcoin was very positive too, and that's one of the thing I would like to cover in today's webinar is, should we be focused on gold or digital gold? And we'll take you through some slides there. Or should we even hold or fold gold, in your portfolio? So gold dropped 0.2% for the week, but other indexes, the risk on assets, all the equities and all the cryptos did pretty well in the last week. And then why? Why did they do well? Because there was not too much of noise from the White House. And the information that we got from JD Vance from India, was very positive that they are very close to signing a deal with trade deal with India. And the other news from Apple, where the news said that they are going to move their manufacturing to India, that was very positive too. The delegation that came from Norway, that discussion went well as well. And then overall, I think the market is at a level where it is trying to figure out, how long to stay at these levels. So the market has been consolidating sideways. On Friday, the S&P 500 hit the 5,500 level, and now it is headed towards the 50-day moving average. So, if it crosses that, I think we are again back in the positive trend. We'll be out of the hole, and then the upside momentum may start. So at this point, we are still cautious. We are not really going full steam back, 100% risk on. So our models are holding about 20 to 30% in treasuries. So we are threading cautiously, you know. And next week is a huge week. close to about 138 companies are uh, announcing their Q1 earnings. So, that's going to give us a very good indication whether corporates are performing and what is their guidance for rest of the year. So out of the 16% of the S&P 500 which came out with their results, including Tesla and Google last week, were all positive. Tesla was not all that great numbers, but still, some of the messages from Elon Musk where he said, he's going to focus again on his companies, and Doge is now at a level where it can work with the existing team that he has put in place. So that brought some confidence in the shareholders of Tesla and other companies that he owns majority of the shares. So overall, good week. Next week, let's see how it goes. There are a lot of macros as well as results coming out of multiple companies. So it's a big week next week. Next slide, Jyoti. Jyoti, next slide. Yeah. Okay. So coming to the question of how much of money of from your portfolio has to be in commodities versus US equities. So if you look at this slide, it is very clear that gold has been, running very, very fast, and it has generated a 24% return for the year. And for the month of April, it is positive 4.5%. Silver has been doing well for the year as well. So if you look at gold, silver, copper, year-to-date numbers, they're all double-digit numbers. Whereas if you look at S&P 500, Nasdaq 100, Russell 2000, they're all negative for the year. Uh, so the when money goes out of equities with all from all these companies, it it will land in safe haven assets such as gold, which is inflation protected and safe haven. Silver again comes after gold, and copper is something that every other industry needs, and particularly with issues going on with China, there is a big demand for copper. So copper also has been trending upside. And last but not the least, Bitcoin, which is the digital gold, had a breakout last week, and we saw a 12% improvement in the price of Bitcoin. And we think this breakout will continue in both Bitcoin and Ethereum, and slowly the altcoins may also follow. So we are watching all these markets very carefully. So if you look at all these different asset classes, it clearly shows that investors are taking their money outside of S&P 500 because of one, it has already gone up a lot. It was trading at almost 26, 27 P. Now it's at 19 price earning multiple. And same with Nasdaq and Russell 2000. So there has to be some good catalysts for it to kind of really pump. One is the interest rate cuts. Second is the finalization on the tariff deals. And third, how the earnings are going to pan out. And last but not the least, how the consumer sentiment is going to get impacted because of all this. So it's a wait and watch thing, but clearly we see commodities doing better than equities so far. Next slide. Now looking at the gold chart, right? If you see how gold has done, as I said, it's done almost 24%. But something that goes up so much, we'll always see some consolidation. So we saw last week to be that week, where gold is kind of taking a breather. There are experts who think gold will go touch $5,000, $15,000 by end of this year, by end of 2026. But there will always be, the tendency, the nature of the market is if something goes up so quickly, there has to be some sideways movement and downward movements, and then again it will pick up. So right now, in our portfolios, we have reduced our allocation to gold, increased it to silver, and increased it to Bitcoin and other materials like copper. But gold has been a good asset class, which is quite safe. But entering at this point, you may want to think through. If you're a long-term investor, maybe a good one. And if you're, someone who wants to park money in a safe haven, inflation protected asset class, it's a good one. But if you're trying to, get in now to make some money, it may not be the right time. So, please think about that. I am not guiding you to invest in gold right now. All I'm doing here is education, telling you, how has gold performed over the last 1 year and where it is right now. Next slide. So the performance of gold over multiple years and what happens when gold hits 25% and it's above the 200-day moving average, meaning the price of gold has been going higher and higher over last 1 year. 1 year represents 365 days, of which 200 days are, working days when the markets are open. So, gold has done very well, but how is it going to do from here on? So if you look at the seasonal data, the past historical performance of gold, if gold hits that number, for 1 month after gold touches 25%, over the next 2 months, it can be around 0.2%. So you will not, I think the meat is not much if you enter gold right now. So it is good to be watchful and enter at the right time so that you don't regret that you entered at the wrong time. Again, there is no guarantee that something will go up or go down. That's the nature of the market. But what I can tell you here is our team is watching every other asset class very, very carefully. And our goal is to be in that asset class which is going to generate positive returns. So our investors can see value coming out of my time equity and our team. Next slide. Coming to silver, silver also has been up, as I mentioned in the second slide, but it has been consolidating, meaning it has been going sidewards, around its 50-day moving average. It's a good diversification vehicle because gold has gone up so much. The second bucket in commodities is silver, third is copper, and then comes all other material like platinum and bronze and other rare earth materials. But silver is the second one, and it has done well. And in our model, which I'm going to show you in some time, which is the metals and crypto model, which you can find on our website as well. We will go through that once you understand and get the knowledge of different commodities that is out there. Because most of us know S&P 500, we know the equity markets, we know some of the tech names that we all are part of because the heavyweights in the 500 S&P companies are tech. Nasdaq 100 is all made of tech. So I think there is a place for your money in other asset classes as well, and that's what I'm trying to educate you here. That you should look at all asset classes when you're putting your hard-earned money. Next, copper again done very well, kind of sidewards. Now, one thing to keep in mind when it comes to commodities. Commodities does not have financials like S&P 500 company has, right? If you look at Google, there are a bunch of people running the company, so it does well, does not do well. But commodities are purely demand and supply. It is speculative. When people get worried with maybe other companies, they park their money in commodities, or whenever there is a need for very high demand, particularly copper is used in industries. Everything that we use there is copper in it. So copper is the basic input for a lot of manufacturing facilities, manufacturing companies. And with what is happening around the world, where manufacturing is moving out of China, trying to move out of China to some other countries like Vietnam, India, Thailand, and other countries, there is going to be a lot of demand for copper because copper is the basic input for a lot of manufacturing. So, there is a lot of, hoarding of commodities now also because of the tariff news. Anything can happen anytime because of the way White House is planning the balance sheet of United States of America. So, people are hoarding assets, people are hoarding consumables. So, everything looks good, inflation is dropping. So we don't know how the next 8 months is going to pan out. So but copper has certainly done well, and now it is kind of on a sideward movement, or sometimes some days in the week on the downside movement. Next. So what are the news coming out next week? We are going to have consumer confidence report for April, which is again, it is down right now. Let us see what happens this next week. The jobs opening report is also going to come out in next week for the month of March. And then we have the ADP reports, again connected to employment. And then the big one is non-farm payroll, again connected to employment in uh, on Friday. So it's a week packed with lot of macros. We have the core PCE also, which is the gauge for inflation. Now the federal government, particularly Jerome Powell and his team, they actually look at these two numbers very closely. Inflation, which is dropping, and unemployment, which is standing very, very steady. So only if these two numbers touch their threshold, which is 2% and 4%, that is when they can think of lowering the interest rate. If interest rate goes down, they are then going to think of further interest rate cuts, and that's going to boost up the economy because most of the companies today are doing business with very expensive money. So that interest rate cut has to happen. Right now, equity markets are pricing in few rate cuts. 83% is the gut feel and the survey results for rate cuts of this year for about three rate cuts, but we don't know. That is another point that keeps going on between Donald Trump and Jerome Powell. That's what caused the downside on the market, 2 weeks ago. So, a lot of news and lot of macros. That is what brings in uncertainty and volatility in the market. So keep watching, but don't take knee-jerk reactions because uh, the earnings of most of the companies which has announced its earnings so far has been good. And we will see what happens next week of the almost 130 companies which are coming out with their earnings for Q1. Next, our model performance, S&P was, for the year so far is 5.76. And if you look at our custom models on the right side, the last three models which are circled in green, we are close to S&P 500. We are a little poor in terms of numbers for this week because S&P really took off, and we are almost 20 to 30% in treasury, which earns about 4.5-5% because we are kind of cautious. So our goal is to protect the downside and try to get back in the market completely risk on, once we see the momentum pick up. Now, our models are very well diversified between growth, value, blend, and next generation. So if you look at our ETF models on the left-hand side, so if you look at next generation, while they are down 8.45% for the year, if you look at the week-to-date numbers, it was up 10% for the week, almost 11% for the week. And if you look at growth, our growth model performed extremely well compared to even NASDAQ and S&P 500. So, a combination of these ETF models is what makes our custom models. So right now in our custom models, we are around 5% growth because 5 to 10% growth because growth is the one that is getting beaten up. Uh, and then value we are at around 10%, and then next generation we are around 5%, small cap about 5%, and then crypto and metals about 20% because we are betting big on commodities. And next is international. We believe a lot in emerging markets and international markets. So our allocation to international is very high till we really get that confidence in the US 500 and NASDAQ companies. So our performance has been good overall. Happy with what we have done so far. The custom models were outbeating the S&P 500 and Nasdaq by a huge percentage point. Like in February. Right now with the drawdown, I think we are very comfortable with where we stand, and I think in the next 2 weeks we'll bridge the gap or even do better. In our models. So we are actively working. We are super active compared to a lot of other financial advisors out there who just put money and just leave it there. And for those who are savvy about individual stock models, because individual stock models have a tendency to do very well or do not so well or do very bad, depending on which model you pick, right? If you look at our high beta model, it's positive 9.14%. but for the year it's down 9%. So it goes up very quickly, can come down very quickly too. Whereas if you look at our all-weather model, it has performed extremely well. It's actually doing better than S&P 500 year to date. S&P 500 is down 5.76%, whereas our all-weather model, which consists of about 15 individual stocks, and the name all-weather represents that it will try to weather every other weather. Whether it is a down market or market. We kind of maintain that portfolio pretty well. So we have a lot of options. So this is like your a la carte. You can either choose to go with custom models and leave it to us to manage it actively, or if you want to go to any particular model because you like India or you like China or you like Japan, you like the Trump stock model, or if you want to get into the contrarian bets, our contrarian model is done extremely well. 9.57% for the year. The entire line is green, month to date, week to date, and YTD, everything is green. So we have all of this, so if you need help, talk to us and we can certainly help bring stability to your money as well as actively managed portfolio. Next, coming to structured notes, for those who are new here on this call today, structured note is a way to be in equities, but with protections in place, which means, if the market falls, you don't fall as long as it breaches the protection barrier. So let me explain you these two notes. The first one is a 38% note. It's a 2-year note. So here the tickers that we are betting on are Dow Jones, RTY is small cap index, and SX5E is the European index. The reason we have added Europe is because we believe in emerging countries and Europe, Japan, and Germany. This is a 2-year note betting on, 3 different indexes. So the way this works is, if these three lowest of these three indexes at the end of 2 years is flat or positive, you make 38%, or in other words, 19% per year. And if any of the indexes are below, the purchase date of May 2nd, then you don't lose any money. You just get your money back. And only if it is below 35%, that's when you lose your money. And for an index to fall 35%, even if you look at what happened over the last 1 month, particularly on the Liberation Day, the market has not fallen 35%, right? It took a hit of almost 20. So we have a downside performance protection of 35%. So let's say you buy into this note on May 2nd. The market is already down by almost 6 to 13%, depending on which index we're talking about. And you get another 35% downside protection on top of it. And with a confirmation from Morgan Stanley that if these three stocks or tickers are flat or positive, meaning it does not have to go up a lot, even if it is up by 1%, you get 19% per year or 38% for 2 years. So this is excellent for those who want protection of up to 35% on the downside, and happy with 19% on the upside, even if none of these indexes perform 19%, even if it is up by 1%, from May 2nd, 2025 date. So, whatever happens in between, that noise doesn't bother you. It's a liquid asset. You can sell it any day you want. So this is a good way of kind of protecting your asset against an index. The next note that is listed here is a growth note again. And this note is also a 2-year note. It is with the S&P 500 and NASDAQ, the two indexes that are very well known throughout the world. 500 best companies and 100 technology best companies. So here the protection you get is 30% on the downside. And again, the date here is also May 2nd. And on the upside, it is full upside. It is not capped to 19%. It is completely uncapped return that you will make. So let's say you are in S&P 500 yourself. There is no protection to it, and there is no more than upside to it, right? So if S&P falls 10%, 2 years from now, you are down 10%. Whereas if you invest in this index, in this note, if it S&P is down, you get your money back 100%. If S&P is up, you get 1.17% on the upside. So which means if S&P is up by about 10%, you get 11.7%. So it's a pretty good note that gives you 0.17% upside, more than the actual upside. And on the downside, you have a protection of almost 30%. So excellent note for those who are already in S&P 500, but concerned about the downside if there is some bad news or tariff news or anything coming out, and you can't sleep at night because the market is just going up and down and you're getting worried. This is a place for you to put your money, right? So talk to us if you're interested in this. The date for trading this note is May 2nd, and this note is extremely liquid. Any day you want to sell the note, we can sell it in the private market and return the money back to you in like 2-3 days. So what I'm trying to explain you here is we have so many options. We have our portfolios which are actively managed, and it does not have any protection, but we manage it to give you protection because we are watching it every day. Then we have these notes where protection comes automatically, and the upside is more than what you might find as S&P's standard 10-year average return, right? 19% per year is pretty good because the average return of S&P 500 is between 8 and 10%. If you include dividends, it is around 10. If you don't include dividends, it's around 9.5, 8 to 9.5%. So this is a very good option for you to park your money with the protection and with the upside if the stocks are flat or positive. Next slide. Two other things I would like to present to you. One is our digital asset fund. We entered at the right time. Our first investment to the fund, which has beaten the Bitcoin results, last month. So this fund is on for investing. So talk to us if you're interested, because as I said, Bitcoin has had a breakout, which means it may touch 108 very soon, because it had touched 108, just before at that time of Trump's inauguration. And with so much of good things happening in the digital assets world, the crypto world, we are very, 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 very confident about Bitcoin and other large cap coins. So this fund invests in America's top asset managers and top tokens. The minimum investment for this is $50,000 as per our PPM. But if you want to try it out with 25, I'm happy to have you in the fund. But you'll have to send us an email today itself for us to honor that 25K minimum. So talk to us or write to us at wealth@mytimeequity.com or ir@mytimeequitype.com. You will have a lock of 12 months, if you invest in this fund. So it's not liquid for 12 months. It is a liquid fund, but we want you to be in this fund for 12 months at least to see performance. So that's a 12-month lock, and the redemptions can be done quarterly after that. Meaning after 1 year, if you want your money out, we can return the money back to you at the net asset value, whatever is the valuation of Bitcoin at that point of time. If you look at the numbers presented here, if we had the fund open in 2024 on a back-tested model, the fund would have generated 86% return, and then with the drawdown of 79%, which means at any given point of time, the volatility of Bitcoin and the cryptos, the volatility is very high, meaning it can go up and down very high. uh, you know so while the upside is around 86%, the downside can be around 79%. That's why we have a 1 year lock. We want you to be in because cryptos as an asset class is a new asset class. It is getting a lot of attention from the government and all over the world, all governments of the world. It usually goes up when the government prints more money because it's inflation protected, because it has a limited number of tokens, not more than 21 million tokens, for Bitcoin. So, it's a liquid fund. You can exit after 1 year on a quarterly basis if you want to. Otherwise, my suggestion is, this is the way to create generational wealth. So if you invest, let's say 100K in this fund, you should just leave it as is and look at it after 1 or 2 years and see how the money has grown. So, reach out to us again. Great asset class. Fund is open. We open it once a month. So it is right now open for the month of May. So if you invest now, it will get invested on May 1st. Okay, so this is another opportunity that we would like to have you in the fund. Next slide. Okay, so that brings us to the end of today's webinar. So we covered equity markets, crypto markets, few structured notes, performance of our models, and then our digital asset fund. There is a lot more that we can bring to you, like private credits, private infrastructure, private equity, hedge funds, multiple asset classes. But for that, you'll have to contact us and we can have a one-on-one conversation. We have a very well designed model for, someone coming in with 100K, 200K, million, 2 million, 5 million, 10 million, so we can come up with a very good financial plan for you and show it to you, and then we can together decide whether we want to start putting money against those asset classes or models. I am now open to taking questions. Jyoti, do we have any questions?
Yeah, Sudhir, we have around few questions.
Okay, let's take it. Okay, I think I'm seeing few questions here. How do you buy silver and copper, physical or digital? So yeah, we don't buy physical coins. Now for digital, we have the digital asset fund, which I showed you. If you can go to that slide, Jyoti, when I'm speaking. We have the digital asset fund for cryptos. Now for silver and copper, we do have ETFs, multiple types of ETFs, on different marketplaces. So we invest in ETFs in our models, the metals and crypto, we are in the ETFs. Next question, how long will this digital fund continue? So this digital fund will continue perpetually, meaning we don't intend to close this fund. Whoever wants to come in, leave, can do that. We have a limit of 99 investors plus me, so about 100 investors total. We can't have more than 100 investors in this fund. So, whenever we have that problem of number of investors crossing 100, we will end up returning the smaller clients and taking in bigger clients, or we would request you to keep investing more if you see the results coming out of it. So next question is uh, about Tesla. Tesla is a very tricky stock. It's an extremely volatile stock, but it is a futuristic asset class because they are into EV and robotaxi and all that. And the biggest asset that Tesla has is Elon Musk, and because he was focusing on Doge and other political, aspects. There was a lot of backlash, but over the last week, it has come back big, and particularly after what Elon Musk said about robo-taxis and his attention to the business. It is valued at almost 89, 80 to 89 PE. So, it's an extremely expensive stock, but it has been performing well, given the reasons that I quoted just now. So, and also, I think if Tesla gets entry into other foreign markets, now they are coming up with 0% APR and all that. So, we can talk to you about a complete framework of why Tesla, what are the analyst rating for Tesla and things like that. So reach out to us if you want to take a bigger position in Tesla, or if you already have a bigger position in Tesla, we can help you with writing calls on it or protecting it with a collar. I have multiple ideas on protecting your large portfolio. Let's say you are working for Meta and you have all your stocks in Meta because you got all the stock options at a very low cost. And today, if you sell it to diversify, you would end up paying a lot of taxes. We have different ideas like an exchange fund where you can put those Meta stocks in a fund, and you, instead of having only Meta, now you have access to 20 other large cap stocks. So you are diversified without having to sell. Or we can place a collar on your Meta stocks and, or Amazon stocks, and try to cover the risk of those stocks falling. And we can put all those, constraints on the fall of that stock and try to protect that stock. So reach out to me if you need that help. Happy to kind of share those ideas as well. Next question is about Intel. What about Intel's future? Now, Intel took a beating because their results were not all that great. But Intel is a 30,000 pound gorilla out there. There is a lot of confidence in the company because of the resources that it has access to. But so far, it's not been performing the way Nvidia or TAMC and other semiconductor companies, including Texas Instruments, performed very well last quarter. Their results were awesome. For Intel, if you are bullish about Intel, we can also create a structure note for you with 30-40% downside protection or a principal protected note. If you are a believer of Intel, again, it's your conviction. If you have a lot of Intel, I can help you with protecting it by the caller and with call rating options. Or if you want to invest in Intel, then I can certainly help you with a structured note on Intel. So yeah, we can be your solutions provider, for whatever you wish to do. Can you bring up the SPY, RTY, NDX note? So can you bring it up, Jyoti? So this is not an income note. This is a growth note. So the SPY. Okay, I think we are talking about something else here. So we are talking about a different note. I don't know whether we have the slide on that right now. So maybe Jyoti, you can see if you can log into the website and pull that note, from the structured note page of My Time Equity while I'm taking other questions. Uh, mm, yeah, so if you look at this page, if you go to this page, there are all the structured notes that we have done listed. Now, the one that is being that I have received a question on. This is not the note, but let's talk about this note, Jyoti. This is a bearish note. If you are a believer that the stock market is going to crash, this option here will give you an upside if the market goes down. The trade date on this is April 30th, so we don't have a whole lot of time. And this is on S&P 500. So if you think S&P is about to fall, which I don't think it is, but if your way of looking at the world may be different than mine, I'm a very positive guy for the equity markets right now. I'm cautious, but I don't think I'm bearish. I'm positive because everything looks positive, except for all the news that is about the tariff. But the bearish note is something that you have access to as well, if you want to talk to us. So we are talking about this note, which is the income note on SPX, RTY, and NDX. Look at the ones that have been closed, Jyoti. Okay. I'm not sure what we are talking about. Maybe you send me an email, uh, around if since you have brought up that question about SPX NDX monthly coupon. Please send us an email and happy to answer that. I don't want to waste time of everyone here. Do you have more questions, Jyoti?
Two more questions we have.
Okay. Okay. From a long-term perspective, is it better to pull out from My Time Equity China fund? Well, China is I think China is going to do well because if you look at what is going on with China, they actually came out last week and they said they are going to reverse all the tariffs that they are planning to put on a lot of different things, right? So that's a positive sign. And most of the tickers that we have in our model uh, are all large cap, very good companies. I don't think getting out of China is a good idea, particularly because you went into it very recently. So leave it there for some more time. I think they will work out something between US and China very soon. So I don't think we should take knee-jerk reactions. I am okay with you leaving it there, Annaji. Can you explain different fees related to crypto fund? So we have a fee of 1.5% management fee for the year, and we have a performance fee of 20% if there is performance and if the performance is more than 8% per year. There is a hurdle rate. So there are fees associated because we have to run the team. But given that, the returns coming out of these crypto assets are so high, if you are patient and if you leave the money in the fund for at least a year, because I am very bullish about, crypto this year and in the future. So if you think of this asset class as a generational wealth creation opportunity and put this money thinking that, I will not see this, let it be there. We will send you the monthly statements and we'll get you the audited statements and all. Don't worry about that. All I am saying is this is an asset class that is high risk, high reward. When I say high risk, it has the tendency of going down, like your tech stocks, right? But at the same time, it has the tendency of going up also. So as we showed you on the slide deck, the upside could have been 86% and the downside could have been 79%. So this is something which I am very bullish about. So if you want us to send you the documentation on this, just send us an email and happy to send it. So great. I don't think we have any more questions, folks. Thanks a lot for joining today's webinar. We would love to help you in your journey of investing. Reach out to us. The time that we are in is very, very interesting. The world is in the making to the next for the next 30 years. What is going to happen? I think that is being defined right now. So reach out to us. We can have more conversations about what is happening, different asset class. We have a lot of real estate assets as well. We can talk to you about tax planning for 2025. We can help you with insurance policies which are funded by the bank. So there is no shortage of ideas here, guys. So just come to us, talk to us, and we'll be more than happy to help. Thank you for joining. And Jyoti, thank you very much for taking care of all of
Thank
us.
you.
And we'll talk to all you guys next week. Have a good weekend, guys. Bye.
Thank you. Yeah. Thank you all. Have a great weekend. Bye bye.